And we're back. We are back. I wanted to check in here on the SPY with you to see if we've made any progress on our credit spread. It was a call credit spread, and SPY dipped all the way down to what, 406.37 after we attempted to put the trade on. We just missed our window right through here, just missed our window of having that call credit spread filled. But then I saw, hey, we're making our way back up. Making our way in the world today takes everything you got. You get all the way up here to 407.62, and that trade would have filled back here. But since then, time, the theta decay on that credit spread has, well, decayed. So I would imagine we're still not filled, but we'll check it out here. No, it's still on the board as pending. We'll leave it up for now. We'll leave that thing up. It could easily do nothing today and then just expire unfilled at the end of the day. But if SPY does, oh, here it goes. It could be getting close to filling. Definitely a fill if that thing gets to 408. But then I'll also be biting my nails. 408's too close for comfort, isn't it? We'll leave it on there for now. We're going to look through some of these other positions as well if there's anything we need to bring and take off the table. Like this is getting close. This Caterpillar 202.50 put, that's getting close. I'd like to see it over 50%, but it's still, almost 2 weeks out. It's April 21st. We do have a 207.50. That one, of course, is at a less percentage of profit because of its dollar amount. This John Deere, we'll leave that on because that's in a really good position right now at $355. It is up over 50% profit, but we'll leave it on. The Devon puts, the only reason that they're showing this amount of profit is because they've been rolled a couple of times. Because right now, if that was just two contracts at $55 puts, they'd be taking gas because Devon is in the 53s right now. These 11 Devon 53 calls at the very moment, and I'm very emotional, so I can change my mind at any time. At the moment, though, if we do have those called away, I'm fine with it. I'm not going to roll them. I'm just going to do the wheel of fortune on Devon because these energy stocks are so volatile, according to what gas and natural gas and oil are doing. So we have several positions with regard to Devon and Coterra and EOG and Valero that I will be more than happy to let them all be called away on the shares that we have because we've collected a bunch of premium and a bunch of dividends already. So we could re-enter when they turn red again. Coca-Cola, I've got 200 shares of those. I'll let them both go at this point because we've collected that dividend. Southwest Airlines, where are they at right now? Let's see. That's a 33 call. I think they're in the 32. They're not at 32 yet. 31.85, up 0.82% today. So we'll just come back to that. Let's go back up here. Okay, there we go. So we did get filled on our call credit spread, which means that SPY is racing upwards. Probably it could even be up over 408. So let's take a look at it. It is. It's at 408.15 and rising, because I see a bad moon rising. I feel trouble's on the way. I really don't. I still feel confident at 410. It's taking on a new high of the day, which then puts us under pressure, but we're less than 4 hours. In fact, we're 3 hours and 19 minutes from the close. So if we can get some action back in the red, we're going to be doing just fine. Otherwise, we'll be under pressure on that trade today. That's okay, you say. So let's see what else, because I was looking at possibly putting a screener together live. We'll do it live just to see if there's any opportunities of assets that we wouldn't mind owning that are in the red today. Maybe sometimes, of course, it's an emotional reason that cannot be justified, and we like to enter those positions. So let's go over to seekingalpha.com, click on the stock screener, and they have a bunch of already built-in prepared screeners, but we're going to build our own. Let's build our own like a buffet. Create new screen. Let's go to, we're going to change all of these to a minimum of hold. So around 2.50 on the hold scale, hold all the way through strong buy on the 3 raters, which is the Seeking Alpha authors, the propeller heads, that's the quantitative robots that put together their reasoning and their math, and then the Wall Street analysts. So we have 2,770 stocks on the board. That's too many. So let's narrow it down some more. Let's go to United States. Hold on. United States brings the number down to 2102. Still, we need to go down from there. And in fact, I want to see trading because we want to see what it's trading at today as far as the stock price, so we can see if these are in the red at all. So we got that going for us. Let's add some more filters. So we want to make sure at this juncture that they're paying a dividend. Let's get a dividend grade in there. What do you say? Dividend safety, dividend growth. Let's start with those two, okay, and then see what we have to make the adjustment on to get this filter where we want it. Of course, we don't want dividend safety of an F. Let's get it to at least a C minus just to see what it does. And dividend growth, let's get that to a C minus. So it's C minus through A plus on dividend safety and dividend growth. Now we're down to 661. We're getting there. Yep, we're getting there. What else can we add to the filters that might make us feel like real sweethearts? Let's look at dividend yield. Let's go dividend yield forward, okay? Dividend yield forward. And let's put in there just a very simple number, maybe 1.5. So it stopped at 1.6%. Let's just go there, just see what that does to the number. Now we're down to 422. Let's add another filter. Let's go to debt. In this type of environment, debt becomes, the joker because cash flow is king. You know that cash is queen and debt is the joker. So let's look to debt to equity. What could we do there? I don't want to see anything over 70% on debt to equity. Okay, that's still a lot, but it's a lot better than a lot of companies. Can we just dial our own number in? Sure. So we don't want to exceed. Am I putting that in right? I think I am. Now we're down to 243. Still trying to think in my buzzy brain if I'm even putting that in right. Let's go to debt and just see what that shows us. Debt. Yeah, I'm putting it in backwards, aren't I? Yeah, that's what I'm doing. Let's go 0. 0 to 70. I've got the wrong side up there. That's what it is. Bear with me as I do this live. We'll do it live. Let's put the 70 in ourselves. 70%. So from 0 to 70%. So that'll change things as far as debt to equity. So there is our debt to equity. All of these will show under 70% debt to equity as we continue to build our screener to see if there's any opportunity today to sell some puts on an asset that we wouldn't mind owning. So right now we got 155. That's probably a decent number to look at just to see what's red, because a lot of them should be green as we're already seeing. But you know what? The other thing, let me add, can we do volume? We don't want, or we might go to cap. Is there a valuation, earnings, growth, performance, momentum, trading? Does trading show volume? No. You're probably yelling at the screen, click on such and such. Momentum, risk. We like ownership. Does it show ownership of institution? Yes. So institutional ownership, I like that. We like when big institutions own our assets, okay, because they like to do a lot of due diligence. So let's go at least what? 20%? What does that do to the number? 20% brings it to 152. First, we need to go, let's just go to Sorry to be doing this live and trying to think at the same time. And you know me, I can't really do two things at once. I was looking at this Vici. That's a nice company. Oh, you know what? That reminds me. We'll have to save that next thought for a next. Speak up a little, Bart. I know you got your new microphone going, but it's okay to talk out loud. I was looking at Unum. They're only up 30 cents today, but it'd be preferable to do that on a red day, right? So let's keep looking just to see if anything sticks out on the red side of things. Another, just for my own thinking out loud and talking to you, average volume, I like to see it a million plus, because you get down into the low numbers of like 234,000. Then on the options side of things, they're just not as friendly. Speaking of friendly, there's our friend Coterra. They're up 67 cents today. Very nice. Cisco. Oh, here we go. ExxonMobil. Let's look at ExxonMobil just to see what the action is, because oil's flat today. So why is Exxon down? Let's click and open a new link and just see what they're saying about ExxonMobil. Move that over, give us some more breathing room. Summary, year to date on Exxon is they're up 8% already this year. Over a 1 year period, they're up 37%. So what about the last month? In the last month, they're up 3.8. Last 5 days, down 0.28%. So we got some mixed reviews. We got a strong buy here, a buy here, a sell here, a hold there. If you go up to the ratings, it's a hold by hold. That doesn't mean that the options aren't attractive today. Thought you said you had enough energy. Can't stay away. Can't stay away from the energy. Let's just check on first. Let's look at SPY again. So it's at 408.18. Still trying to pressure my 410 call credit spread. XO to the M. What are you doing today, Exxon? And what does that mean for the options opportunities? So you pay for your thrills in regard to these energy stocks, right? Because today, pre-market, they were down. They went all the way up to 115.98, bounced down now to currently sitting at 114.80. So you see how just up and down these types of stocks go, which also, of course, adds to volatility, which then becomes attractive to the trader. So if we trade it, let's just look to a few days out, 4 days out. If we sell a put on ExxonMobil, again, an asset that we're fine owning. And why is that? Well, they've been around a long time. Oil's not going anywhere anytime soon, right? Earnings, they just blew it out of the box the last year as far as their earnings. Hey, it shows a miss up there, but that's based on the analysts, right? I mean, they had $3.40 a share on the normalized, and then on the accounting that's generally accepted accounting principles, they missed by 17 cents. They beat revenue by $4.66 billion. And then they have an earnings date coming up at the end of the month, April 28th. And if we scroll through here, we should see a bunch of green. See all the green through here because oil has been, on the rise. If we look at dividends on ExxonMobil, they pay a nice, healthy dividend of 3.16%. They should have an ex-dividend date coming up the middle of next month. But if you look at dividend yield over time, so we're at 3.1% forward now, 3.16. Their average dividend is 5.6. Doesn't that mean they're overvalued, overpriced? Typically, that's exactly what that means on dividend yield theory. But again, drum roll please, that doesn't mean that it's not a good asset to trade options on if you don't mind owning it long term. Now, right now, according to our quick computations, our quick math, the 114 is only getting us $1. So right there, eyeball test says, I don't know. Let's do the math though, because we can annualize, right? We can annualize. That's 4 days out. 99 cents. 99 cents divided by 114. Okay, that's in 4 days. So we take this number, we divide it by 4, and then we mark it with a B, and then we multiply it by 365 to get annualized, and we'd be at 79% annualized. Okay. So but that's because it's only 4 days out. If we look at 11 days out, so we don't even have a 114 11 days out, you'd have a 112. So if you went with that 112 and you got a buck two, and when you divide it by 112 on the collateral, divide that by 11 days, because that's 11 days out, and then multiply it by 365, then you're at 30% annualized. Okay, that's because time keeps on slipping, slipping, slipping. So that time becomes always part of the equation, because we're looking at the return on capital annualized. Now, again, a trade of this magnitude every 4 days may not always be available, right? So we're at a buck for a buck 14 on a stock that is currently at 29% implied volatility, and this would be at nearly a 40 delta. So you'd have just about a 70% chance of profit, but a 40 delta. So that's a bit of an inverse with regard to the probability of profit and the return on risk in this trade. So it's already up to a buck one, which means it must be ticking down just a little. Go to the 1 day just to get us a little bit better view. Yep, ticking down just a little bit right there. What is oil doing in general? Go up here, check on oil. It is down 0.5%. So that is part of the scenario right there. That's part of the equation. S&P at 408.12. So keep it going sideways. I'll be just fine with that S&P with regard to this buy. Exxon and the Mobil though. So what we would do if we wanted to do a tight wheel play on this, we would do the 4 days out on the 114, right? But then we would be immediately under pressure. We'd be under pressure. We would also, though, be looking at the wheel. So if we get assigned the 114, right? So even if we just use the math based on where it's at today, so it's at 114.81, that would give us the same type of options outlook and premium. So if you were to be assigned this at 114 on Friday, and then you look to sell a call immediately after that, and just will use this 4-day number, and you just went up to 115, you'd be collecting over 1% premium. So, energy stock is and can be a very nice wheel strategy, but it also, the reason that it's very nice is because the risk is higher. It's so risky. Let's go to the Exxon just to see what it's done like over the year-to-date movement. The year-to-date movement, Y to the T to the D, year-to-date, and we'll just do a quick scroll through, because look at that. It was all the way, wait, that's 1 day. That's why it's so tight. So it was up as high as 119, as low as 99. So that's a big move, right? That's a big move. And since that, which was just March 17th, it's gone from 99 all the way up to 117 in that time. So it could easily crash through the 114 this week, especially if crude continues to dip. Because if you look now, it's at almost 1% down on the day. So it is a risky move, but it's a great company, Exxon Mobil. The wheel could be deployed. Going back here, that should be even higher now. That put should be even higher. No, it's even lower. So maybe that's time. I'm going to consider that trade. I apologize that I've spent 20 minutes just blabbing on, but I wanted to look through this screener with you live. So I'm going to continue to look through that, come back, probably make a trade on ExxonMobil, and also may have another one teed up for us today. But that's what we have right now. 3 hours, 3 minutes to close. And we've got SPY. Oh, it's accommodating my trade right now. It's going sideways. That's all we want it to do. Maybe dip down just a little bit, so I'm not as nervous. And so Robinhood doesn't try to close that trade for me without my permission. by the way. So that's what we have. See you in the next video.